Shivamanka, and welcome to this new video of management case study interview. The purpose of this video is to give you an understanding of how management case study interview goes and what is expected of you in it. This video is divided into two parts. In the first part, I'll be going through the interview and present line by line understanding of it. In the second part, I will analyze the interview as a whole. For your context, all the black text with blue background you see is the statement of the interviewer, and all the blue text with white background you see is the statement of the candidate. Today we are doing a case study interview in which our client is a bank. Your client is an Indian commercial bank which has observed a decline in its profitability in the last 18 to 24 months. We have been roped in to identify probable causes and give suitable recommendations. So the first line of the interview is one of the most important line because it tells you the scope of the problem. So we know we are dealing with an Indian commercial bank. They're facing a decline in profitability in the last 18 to 24 months. That's about 2 years. And we are roped in to figure out what exactly is the problem coming from and provide recommendation and solutions. So this is a typical profitability case study interview, and a profitability interview is divided into three parts. In the first part, you understand more of the client's business, its competitive scenario, and industry as a whole. In the second part, you try to structure the situation, figure out where exactly is the problem coming from, and in the third part, you provide recommendations and solutions. So right now we are in the first part where we'll try to understand more of the client's business. All right, so I have understood the problem correctly. Just so I have understood the problem correctly, our objective is to identify the cause of decline in profitability and suggest measures to reverse it. Yes, you can proceed with that objective. To get a more nuanced idea of the context, I have a few questions uh, I would want answers to. Is it fair to define the commercial bank as one that offers services to general public and not to companies? That's a fair understanding. Thank you. Could you offer me some more details about the bank's clientele? Is it a public or a private bank? And what is the rough urban-rural composition? The bank in question is a leading player in the private sector. Also, a majority of the bank's business is from urban areas, and in rural areas, it has more muted presence. All right, we what is the magnitude of decline that we are looking at? Also, are the other banks in the country also faced with similar situation? The dip in profitability has been recorded around 2 percentage points. Most competing players in the industry have seen a steady growth during this period. Okay, that means that's not an industry-wide problem. Something is wrong with our bank specifically. Interesting. This leads me to hypothesize that there's some systematic issue specific to our bank. I would like to dive into the two major components of profits, revenues, and costs. Is there any particular head you would want me to look into first? So now we are moving to the second part of the interview where we are trying to structure the problem and figure out the source of it. Before you do that, could you help me understand the major costs and revenue heads for a typical commercial bank? Okay, so there comes your theoretical knowledge where you have to list down all the things which constitutes profits and revenue sides of a bank. Sure, the major revenue sources of a bank would be namely interest income, transaction fees and charges, and other tertiary services like foreign exchange, advisory, etc. Investments could also be a major source of revenue. The cost, on the other hand, can broadly be segmented into two major buckets: interest expended on deposits and operational costs. Do we have any numbers with respect to these components that would be useful for my analysis? Is there any other cost head that you would want to consider, especially in Indian context? So the interviewer is trying to hint the candidate that you may be missing out something, and that may be the reason of the problem. And be on a lookout where the interview tells you such cues, because remember that the interview is there to help you out to figure out the problem, not to make it more complicated for you. So be on a lookout when the interview says such cues. Oh yes, I missed out on provisioning and con contingency cost, which must be a fair portion of the total cost. Correct. So, to answer one of your previous questions, our revenues have grown in line with our projections, but our costs have grown significantly. Sure. So, breaking down the various cost component further down, interest cost can be subdivided into interest expended on corporate deposits and interest expended on retail deposits. The operational cost could be divided into fixed and variable. Fixed expenses would comprise of rent, payrolls, utilities, other administrative costs, etc. Variable portion will comprise of raw materials, stationery, commissions, marketing, and customer acquisition expenses, etc. Good. That's a fair analysis of cost. It's been recorded that our interest expenses on retail deposits has shot up disproportionately. Okay. Um, Understood. So my understanding of the situation is that the average cost of fund for the banks have increased. Yes, that's a fair understanding of the scenario. Look at how a typical commercial bank in India accepts retail deposits. Two things come to mind. Uh, Demanding deposits like current savings account and term deposits like fixed recurring deposits. Now, term deposits typically enjoy a much higher rate of interest as compared to the demand deposits, thereby meaning they are a costlier source of fund for the bank. Breaking it down further, there are two probable reasons for the increase in cost of funds: change in the mix of deposits, increase in the rate of interest offered. My hypothesis is that there has been a change in the mix of deposits with the bank in favor of term deposits. At this point, it is fair to assume that the average deposit per customer for demand deposit as well as term deposits have remained unchanged. Yes, you can assume that to be true. Okay, so do we have any information about the mix of deposits and the respective rate of growth over the last 6 to 8 quarters? Our demand deposits have grown by 3% and our term deposits have grown by 12%. Okay, interesting. So there appears to be a clear change in the balance of the ratio of demand deposits to term deposits. Assuming that the average deposit per customers have remained unchanged, the rate of growth in deposit is a function of new customer added minus attrition of the existing customer base. Do you have any information on these? There has been no attrition in the customers holding term deposits. The growth can purely be attributed to new customers. However, there's been a 10% attrition in the existing customer base as far as the demand deposits are concerned. Okay. All right, understood. Now I'll try to understand the reasons behind the demand deposits. There are the factors that come into mind as safety, convenience, economical, mandated access to credit. You can focus on short-term credit aspect. All right. Let me try to understand the short-term credit access facilities associated with savings and current bank account. The major ones would be bank overdraft facility, trade credit, and credit cards. Is there any particular head you would want me to dive into first? Right. So the analysis shows that there is a dip in attrition to a particular class of clients, ones who hold credit cards against a current or savings account. Interesting. So, trying to understand the requirements of a typical credit card customer, I would like to break the holder's journey down into pre, during, and post uh, transaction. So, for any particular cycle, monthly or quarterly, uh, the pre phase comprise of the payments of dues for the previous cycle and ends at the initiation of the new billing period. The during phase includes the period during which customers uses credit card, online or offline, shopping, withdrawals, launch access, to name a few. The post phase starts with the generation of bill by the company, followed with the init- intimation of bill amount, reminders, payments, and ends with the confirmation of the payments. Have we been able to understand from our former customer as to which part of the process we are unsatisfied about? They are unsatisfied about. Yes, we have. So the pain point for our customers have been reminders. They often complain that they end up missing a due date and therefore pay hefty penalty. due to our inefficient reminder mechanism. Give me three recommendations to resolve the issue and prevent further attrition. Shift from traditional methods of reminders like email, text to new age mediums like WhatsApp. Offer debit or auto debit facilities to customer where one's holding savings current account with our bank can give standing instructions for automatic payment. Incentivize early payment of dues, some sort of prepayment before bill generation. Thank you. That would be all. So that was a pretty good case study. Candidate was able to exhaustively list all the points mentioned, asked by the interviewer, and finally come to the conclusion. So let's move on to the second part and analyze the interview. So it's very important to maintain very clear interview notes so that because sometimes at the end of the interview, the interviewer might ask for your notes and you should be able to understand everything in one glance. Interview notes. Provisioning and contingency would be an important cost head when it comes to banking sector. Uh, Banking sector specific costs such as interest cost, NPAs should be focused on. Costs are high on account of increased average cost of fund. Visible attrition from the particular class of customer. Understand the customer's journey of credit cards. Some case facts were decline in profitability of the commercial bank in the private sector, decline since the last 18 to 24 months, major presence in urban areas, 2% decline in profitability versus competitors going steadily. Problem is not specific to any branch or geography, increase in cost, revenue, growth in line. Uh, Increase interest expenses on retail deposits. This is a very important part of your notes where you structure the whole problem. So we have divided profits into revenue and costs. Revenues have interest income, tax, transaction fees, and then value-added services. Costs have interests on deposit, operational costs, and provisioning costs, non-performing assets. So interest on deposits were divided into corporate and retail. We were told focus on retail. Retail were divided into demand deposit and term deposit. In demand deposit, where the problem was coming from, we divided all the aspects of demand deposits, which were safety, convenience, economical mandate, and access to credit. Access to credit was the problem where uh, which was then divided into credit card, bank OD, and trade credit. And the problem was coming from bank credit card where they were not getting reminders to pay. Therefore, the attrition rate was high. So to understand the credit card in detail, we divided credit card transaction into pre-transaction, during phase, and the post-transaction phase. And the post-transaction phase is divided into bill generation, invoice communication, query redressal, reminder, payment, and confirmation. And the problem was coming from the payment side. Recommendations provided were shift from traditional methods of reminders like emails, text to new age mediums like WhatsApp, offer auto debit facilities to customer when one holding savings or current account with a bank and give standing instructions to automatic payment, incentivize early payments of outstanding amount. What some of the observations, suggestions for the interview as a whole was it is important to have a fair understanding of the way a typical bank operates, its major sources of revenue, and its cost heads. An idea of nuanced banking concepts like net interest margins or NPAs create a favorable impressions in the eyes of the interviewer. An understanding of the purpose of holding a savings account and or a credit card is helpful. It is important to observe the customer's journey in case of credit cards here or a granular level or the issue could easily be overlooked. So it was a pretty good case study interview. I hope you guys learned a lot from it. If you have a case study interview coming up, all the best. And if you are looking to build a career in management consulting, do subscribe to my channel because I'll be uploading one video every day from now on. And it is a very good framework to not just uh, learn how to crack an interview, but also understand how different industries operate. Because if you become a consultant, you might have to work on very different industries, and it's a good habit of getting some idea of how a different industry works and how do you navigate through problems of different industries. The basic principle stays the same, but you should have a little bit knowledge about those industries to navigate to figure out the source of the problems. So with that, I would wish you have a lovely day and thank you for watching the video.